Money markets have been nervous since the announcement of the budget on February 1st. High borrowing numbers in the budget, as well as absence of any steps to facilitate global bond index inclusion, roiled the domestic markets, pushing the yield on the benchmark debt to two-year high of 6.8%. This comes at a time when global central banks, the US Federal Reserve and the European Central Bank are looking to hike the rates soon. Bank of England, on the other hand, has already hiked rates. And this edginess in the bond markets may make Shaktikanta Das's task more challenging. India's central bank may stick to baby steps for policy normalization, as it is seized by the need to anchor borrowing costs for the government in addition to supporting a durable recovery in Asia's third largest economy. Those objectives could also make the benchmark interest rate a sideshow at today's monetary policy outcome. Madhvi Arora, lead economist at MK Global, for instance, believes GSEC market shows nervousness around impending policy actions and a possible supply-demand mismatch in the absence of RBI. Against this backdrop, even a reverse repo hike or a stance change could disturb the market further. Thus, cautious policy treading and communication will be the key. On the other hand, Joydeep Sen, an independent market analyst, believes the RBI may think twice before hiking the reverse repo rate today.
When RBI takes a decision, they look at so many aspects, like what is inflation, how much is growth, all this second wave, third wave, and all these things, and now this budget thing. So what it means is, since the market has already reacted adversely, in the sense yield have moved up significantly in response to the union budget. So even if the RBI were thinking on 9th Feb they will increase at least the reverse, because the report is reverse if they were thinking. Now they will think twice because the market is already jittery. On top of that, if they increase rates on 9th of February, it may lead to another blow for the market. So I'm not saying no to it, but in case they increase rates on 9th of February, they will think twice before doing it.
Meanwhile, earlier this week, the government cancelled all bond auctions scheduled for February 11, which analysts said could help soothe market nerves. But a huge supply next fiscal will require the RBI's invisible hand in a more visible fashion, implying return of pre-committed GSEC acquisition program. With these points in mind, let us go to Dhaval Dalal, CIO Fixed Income, Edelweiss Mutual Fund, to understand what the bond markets will be eyeing today.
After the disappointing union budget and a consequent increase in bond yields, the upcoming Monetary Policy Committee meeting assumes significance. There are essential four expectations from the bond market. Number one, the bond market would like to know from the RBI how they will be able to support the borrowing program through open market operations bond purchases in the new year. That will help soothe the sentiment and help reduce the bond yields from the bond secondary market. Second is market would like to know how the Reserve Bank of India is planning to embark on the policy normalization, first by increasing the reverse repo rate and second by providing a glide path on the increase in the repo rate in the new financial year. The fourth is the market would like to know whether the RBI would like to maintain reverse repo rate as a policy rate, or they would like to shift to repo rate as a policy rate by removing surplus liquidity from the banking system. That will help repricing of the short end.
Nonetheless, analysts and the street are baking in at most a 25 basis point hike in reverse repo rate, along with holding the accommodative stance. Given the policy outcome, market participants should expect a volatile day-to-day with choppiness high in rate-sensitive counters like banking, NBFCs, auto and real estate. That apart, stock-specific action amid Q3 results will also sway the indices. Over 300 companies, including GSPL, Hero MotoCorp, Tata Chemicals, MTAR Tech and M&M are slated to report their results later in the day. Yesterday, the BSE Sensex advanced for a second straight day and ended 657 points higher at 58,466. The Nifty 50, on the other hand, closed at 17,464.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.